Hi everyone, JC De Guzman here for our daily top 5 gainers and top 5 losers analysis for August 2020 19, Tuesday. So this is in preparation for the next trading day on Thursday, August 22nd. So today I'm going to talk about KPPI, PHEN, WLCON, SAN, PPG, your favorite, Jollibee, PLDT, SSI, APX, and SLI. So I'm going to give you my technical analysis together with my recommendations in accordance to the methodologies that I'm teaching all of you here at Equilist Analytics. So I'd like to just to give you three reminders. Number one, if any of these 10 stocks, and if you happen to be interested in that particular stock, starts at a price lower or higher than the dominant range that you're about to see, I strongly suggest that you post a request for that particular stock's latest trade in volume distribution and true market sentiment charts in our private clients forum. Secondly, if you are going to do a test buy because the 10 SMACD combo is valid and the momentum power indicator is bullish, you have to do that only when you are satisfied with your reward to risk ratio. Always remember that not because the 10 SMACD combo is valid, not because the momentum power indicator is bullish, it doesn't mean that you should do a test buy right away within the dominant range. No, there's a prerequisite. You have to be satisfied and happy with your reward to risk ratio first. And lastly, just in case you will hear an index company in any of these daily videos, remind yourself that this video is for short-term trading purposes. And if you need a piece of advice that is meant for long-term investing for that particular index or blue chip company, you can just check on the investors tab, or you can go directly to its dedicated thread in our private clients forum. You know that we have a section called long-term investing section in our private clients forum, and all 30 index companies have their own thread in that section. Okay, I hope that's very clear. So let's start with the first stock in our list, KPPI. So by the way, I have plotted the intraday 1 hour chart so that we can identify some intraday support and resistance levels. Since this is an IPO stock, a 2-day-old IPO company, our 10 SMACD combo is not uh, it's not appropriate to use it in this particular case, of course. Uh, and so that's why I'm going to use the intraday chart as well for this special occasion or special instance in the case of KPPI. So here, so this company is closed on Tuesday at 12 pesos and 22 centavos. The support that I'm seeing is at 10.9 as a precursor to 9.84, both of which are in confluence with the 78.6% and 61.8% retracements of this up Fibonacci. Now, if KPPI will continue going up, I'd like to remind you that the resistance, the psychological resistance that I'm seeing is at 16.24. It is in confluence with a 61.8% extension of our up Fibonacci. Okay, so let's take a look at this trade and volume distribution chart to see where the dominant range is. So with respect to the closing price of 12.22, I would say that the dominant range is between 11.5 to 12.22. Just in case it will start at a price lower than 11.5, I would suggest that you monitor the price between 10 to 11 pesos per share. But at this point, the momentum power indicator is bullish with the exemption, of course, of the what? Of the 10-day volume average, one of those four elements of our momentum power indicator. Since that's not applicable, we're going to weed it out from the four criteria for our momentum power indicator to become bullish. But in this case, MPI is bullish, momentum power indicator. Okay, so next, true market sentiment is bearish. So this has been the case since day one of KPPI. The true market sentiment is always bearish, but the price keeps on going up. The momentum power indicator. That's okay because why? The true market sentiment is not a direction barometer. It's only a calculator of the prevailing mood of the top 10 brokers. It measures the mood. Okay, it then checks the mood. It does not forecast the uh, potential or probable direction of any particular stock. So in this case, what's my overall sentiment? I am bullish on KPPI. So full disclosure. So this is what I've been doing on KPPI. I've been doing an intraday trading on KPPI. So if I buy it within the day, then I sell it within the day as well. So buy and sell within the day. So that's what I've been doing on KPPI. So I just simply monitor the trade and volume distribution and the 1 hour, sometimes the 3-minute intraday chart of KPPI. So what did I tell you during the Evergreen seminar? As soon as you spot some signs of a weakening upward momentum, adjust the percentage of risk applied in the calculation of your trailing stop loss. Okay, please brush up on your handouts. Review the handouts, especially on lesson number 6 when it comes to the trailing stop loss. Okay, so I am bullish on KPPI. Okay, so I've mentioned to you already what I personally do when it comes to doing some short-term trades on KPPI. So next, PHEN. Of course, since these are no longer IPO companies, we're going to switch back to the daily chart. PHEN closed on Tuesday at 2.92. Support is at 2.2. Resistance is at 2.94. If it breaks above that immediate resistance, of course, the psychological resistance is pegged at 4.22. It's in confluence with a 61.8% extension of the up Fibonacci. The 10 MACD combo is valid. I like the perfect bullish alignment of the 3 simple moving averages that I'm using. What else? RSI is in the neutral level. It's still a little bit far from the classical overbought level. The risk level is moderate, and the positive DMI is hovering the negative DMI. However, there's the ADX still not 25 points, although we can technically say that it's already at that level if we're going to round this up to the nearest tenths. Okay, so I would say that, of course, okay, before I give you my overall sentiment, let me show you first the dominant range. So the dominant range of PHEN with respect to its closing price of 2.92 is between 2.9 to 2.92. So the momentum power indicator is bullish for PHEN. The true market sentiment is bullish, meaning to say majority of the top 10 brokers were still interested in buying buying PHEN at a higher price. So my overall sentiment here is still bullish on PHEN. If you have PHEN and if it's still trading above your trailing stop loss, you can top up within the dominant range. If you are about to enter a new position, then I suggest that you're better off waiting for a breakout above 2.94. Okay, so that you will get a more attractive, a more satisfying reward to risk ratio. Okay, after PHEN, we're going to talk about WLCON. This company closed on Tuesday at 16.58. Support is at, let me adjust the support level at 15.10. Resistance is at 17.4. And the 10 MACD combo is valid. RSI is still far from the classical overbought level. Risk level is low, and the upward momentum, technically it's already very strong due to the recovery, okay, due to the ascent above the 15.74 level last Tuesday. The positive DMI is hovering the negative DMI, and ADX is already above 25 points. So the dominant range of WLCON, let me just check this bigger version of the image. The dominant range is between 16.58 to 16.64. That makes the momentum power indicator bullish. On the other hand, the mood of the top 10 brokers was bearish last Tuesday. But anyhow, since the 10 MACD combo is valid and the momentum power indicator is bullish, that will lead me into saying that my overall sentiment is bullish on WLCON. So you know my suggestion. For those of you who still have WLCON, and if it's still trading above your trailing stop loss, you know that I'm going to say that you can top up within the dominant range. And same thing for those who are yet to enter a new position. Make sure that you are satisfied first with your reward to risk ratio before you push the test buy button within the dominant range, of course. Okay, so next, Sun, SUN. Last Tuesday, it broke above the previous resistance at 0.99, and that makes that price level as its immediate support. Let's see here, the resistance, the immediate resistance now is at 1.13 as a precursor to 1.26. I like the perfect bullish alignment of the three simple moving averages. The 10 MACD combo is also valid. However, RSI is already playing inside the classical overbought level. So it's all the more that you should focus, concentrate, watch your trailing stop loss. The risk level is already extremely high, although the upward momentum is still very strong. The dominant range of Sun is between 1 peso to 1.04, 1 to 1.04. This means the momentum power indicator is bullish. The true market sentiment or the mood of the top 10 brokers last Tuesday was bearish. Anyhow, my overall sentiment is still bullish. Now, if you have a position on Sun, at this point, I would suggest that you try to hold your position first. That should be your default stance on Sun on Thursday, just in case it continues at a price higher than 1.04, and if it maintains a bullish momentum power indicator, then that's the time that you should consider doing a test buy or adding more shares by topping up within the dominant range. Now, for those of you who don't have Sun and are tempted to enter a new position, calculate your reward to risk ratio first. You know that my overall sentiment is bullish, so the only remaining question that you need to answer with a yes is this question: are you satisfied with your reward to risk ratio? If you are, go ahead and do a test buy within the dominant range. So, meaning to say, the uptrend is still more likely to continue with some heads up for a potential profit taking since RSI is already playing inside the classical overbought level. After Sun, we have PPG. It closed on Tuesday at 6.10. I am using a Fibonacci in this case to identify its support and resistance levels. Support is at 5.62. It's in confluence with the 61.8% of the retracement of the up Fibonacci. For the resistance, it's at 7.2. So again, the support at 5.62 is a precursor to 5.13, which is the 50% retracement of the up Fibonacci. Now, despite the appearance of a green candlestick on Tuesday, our 10 MACD combo it remains invalid. So, PPG needs to break above 6.3 to 6.5 for us to see MACD moving above the signal line. Okay, RSI is in the neutral territory. Risk level is already high. Take note, newbies, beginners, focus on stocks with the low to moderate risks only. Now, the upward momentum is already very strong since the positive DMI is hovering the negative DMI and ADX is above 25 points. Here, the dominant range of PPG last Tuesday was between 6 to 6.10. The momentum power indicator is bullish even though the 10 MACD combo is still invalid. The mood of the top 10 brokers last Tuesday was neutral. Now, my overall sentiment here, I'm not yet completely bullish on PPG since the 10 MACD combo is invalid. But what did I teach you during the lesson number 2 or 3 during the Evergreen Strategy seminar? You can preempt, skip the validation of the 10 MACD combo if your answer to these two questions is a yes. The first question, do you regard yourself as an experienced and a disciplined trader? If your answer is a yes, then you proceed to the next question. Is the momentum power indicator bullish? If the answer is a yes, then you can do a test buy within the dominant range, provided you're satisfied with your reward to risk ratio, of course. Okay? So, my overall sentiment here is still neutral, but there's an exemption, just like what I told you a few seconds ago. So, now if you have a position in PPG and if it happens to be still trading above your trailing stop loss, then I suggest that you hold your position for now. Don't top up. If you are yet to enter a new position and your answer to those two questions is a yes, then be very careful in doing a test buy within the dominant range, because I'm not yet completely 100% bullish on PPG. Okay, after those top 5 gainers, we're going to proceed with the first loser, JFC. So JFC, Jollibee closed on Tuesday at 225.2. Support is at support is at let me just put it this here, about 217 to 220. 217 to 220. Resistance is at 240. So 217 to 220 is a precursor to 200 pesos per share support level. The 10 SMACD combo is invalid. Of course, what do you expect? These are the top 5 losers already. So RSI is downward sloping, a lot closer to the classical oversold than the overbought level. The risk level is already moderate for JFC, and the downward momentum is still very strong according to its DMI and ADX chart. The dominant range of JFC is still closer to the intraday low than the intraday high. That's between 225 to 227. 225 to 227, that makes the momentum power indicator, of course, bearish. The true market sentiment, the mood of the top 10 brokers last Tuesday was bearish. There was no interest to buy the dips yet. Because of that, I don't suggest entering a new position. And I'm not going to give any advice of, if you have a position on JFC, blah, 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 blah. By now, none of us must have a position on JFC unless you're going to, kid me and tell me that you have a percentage of risk of 100%. I don't know, 50 or more risk percentage. No, that's unrealistic, to say the least, when it comes to short-term trading. Okay, so don't enter a new position. It's still more likely for JFC to break below the resistance, the support at 220 to 200 pesos per share. Okay, be on a wait and see mode. Don't hurry. It's not the only stock in the PSE. Next, PLDT. It closed on Tuesday at 1,105 pesos per share. It's now at the brink of retesting or breaking below the support at 1,100. Resistance is at 1,200. The 10 SMACD combo is already invalid. RSI is moving closer to the classical oversold level. It's downward sloping, meaning to say Risk level is already moderate for PLDT. The downward momentum is not yet completely very strong, although the negative DMI is already hovering the positive DMI. ADX is still at 23 points, so 2 more points before we will get a confirmed strong downward momentum. Nonetheless, the dominant range was between 1,105 to 1,115. So momentum power indicator is bearish. The mood of the top 10 brokers last Tuesday was neutral. So there was not much interest to buy the dips yet on PLDT. So should we? Okay. So let's not hurry. Be on a wait and see mode. We can make some potential money in PLDT and JFC once these sellers have reached that certain level of exhaustion when it comes to selling. So that's what we want to see. Okay. So for now, stay away from these two stocks. Okay, after JFC, we move on to SSI. SSI closed on Tuesday at 2.75. It broke below its previous support at 2.84, which is now acting as its immediate resistance. The newest support is pegged at 2.45, which is in confluence with the 23.6% retracement of the up Fibonacci. Alright, so as a precursor to 2.10, the 10 SMACD combo has already been invalid since the last week of June. It's been a long time. RSI is almost inside the classical oversold level, but it seems that the downtrend is still more likely to continue here. The risk level is already moderate, and the downward momentum is already very strong, confirmed. The dominant range is closer to the intraday low than the intraday high. It's between 2.75 to 2.8 last Tuesday, meaning to say the momentum power indicator is bearish. The true market sentiment was bullish. So even though they were bullish, I would suggest that we should stay being in a wait and see mode and see if SSI is already will be considered as too cheap to be ignored at this price level on Thursday, or it will continue its descent all the way towards 2.45 to 2.10. Okay, so let's not be in a hurry. Let's be process driven. Let's wait for the momentum power indicator to become bullish at least, and that's not the case right now. So be on wait and see mode again. Okay, stay away from SSI for now, but monitor it. Okay, we can also make some money in that particular stock once these sellers uh, got exhausted, or once they have reached an exhaustion level. Next, APX. It closed on Tuesday at 1.3, support is at 1.27, resistance is at 1.4. The 10 SMACD combo is already invalid because the price already moved below the 10 SMA, even though MACD is still moving above the signal line, but there's already formation of a bearish convergence between MACD and the signal line. RSI is in the neutral level, it's downward sloping however. The risk level of APX is already moderate, and the positive DMI, although it's still hovering the negative DMI, the positive DMI is already downward sloping. Okay, it's not yet bearish however. Okay, now the dominant range last Tuesday was between 1.3 to 1.33. That's closer to the intraday low than the intraday high. Therefore, the momentum power indicator is bearish. The mood of the top 10 brokers last Tuesday was bearish. There was no interest to buy the dips as well. So, this is my recommendation. Okay, my recommendation is if you have APX and if it happens to be trading above your trailing stop loss, I suggest that you hold your position. Don't top up. Don't average down. There is no technical reason that makes it worth it to average down at this point. Okay, don't imitate peso cost averager those peso cost averagers. Don't imitate those who who follow buy below price or any form of cost averaging. Okay, so there you go for APX. Now, if you're planning to enter a new position, postpone that. Not yet. The momentum power indicator is not bullish. All right, next, SLI. It closed on Tuesday at 2.49. Support is at 2.42, which is at the 61.8% retracement of the up Fibonacci. Okay, and then it's at 161.8% rather, and the resistance is at, okay, hold on, we have to change this here. Support is at 2.33, which is pegged at the 61.8% retracement of the up Fibonacci. For the psychological resistance, we have one at 3.10, pegged at the 61.8% extension of the up Fibonacci. I like the perfect bullish alignment of the three simple moving averages, although unfortunately, not unfortunately, it's still fortunate actually that the 10 MACD combo is still valid despite the appearance of red candlestick last Tuesday. It's pretty good. So, but since RSI touched the classical overbought level, profit taking took place on Tuesday. Okay, see the power of knowing or power of monitoring the RSI now. So there, the risk level still it's still moderate. The upward momentum is not yet very strong, although the positive DMI still hovered the negative DMI. Okay, now the dominant range of SLI last Tuesday was between 2.43 to 2.52. For me, this is still a lot closer to the intraday low than the intraday high. Therefore, the momentum power indicator is still bearish. The true market sentiment last Tuesday was neutral. So my recommendation is this. If you have SLI, and if it's still trading above your trailing stop loss, hold your position for now. Don't top up. Just hold it. Okay? Consider the idea of doing a test buy or topping up once the momentum power indicator becomes bullish again. But if this redness persists and you see that the prevailing volume is already higher than the 10%, higher than the 100% of the stock's 10-day volume average, 100%, okay, not just 50%, then I suggest that you reduce the risk percentage applied in calculating your trailing stop loss, because that's already a sign of a weakening upward momentum then. All right, so don't enter a new position in SLI yet. For those who are planning to enter a new position, postpone that plan also. The momentum power indicator is bearish. Resume that plan once the momentum power indicator becomes bullish for SLI. So there you go with our top 5 gainers and top 5 losers analysis for Tuesday in preparation for the next trading day on Thursday. I'd like to remind all of you, especially the 1-year subscribers, if you have not attended the Evergreen Strategy in Trading and Investing in the Philippine Stock Market Seminar, I highly recommend, I highly suggest that you attend it as soon as you can, because it's not every month that I have a seminar in your place. Okay? It's not every month that I have a scheduled seminar. So take advantage of the availability of this seminar in Makati on September 28th, October 26th for Davao, November 23 for Cavite, January 25 next year for Baguio, February 29 in Pampanga next year, and March 28 next year in Cebu. Okay? If you are a 1-year subscriber, you will just have to pay half the price of the standard tickets price. So you will only have to pay 3,250. Okay? You have to attend this one because you will understand better and faster all of the methodologies that I'm teaching you here, from starting from stock selection all the way to the execution of plans. So I'm going to show you how I do things from point A to point Z. Okay? If you are a 6-month subscriber or a 1-month subscriber and you like to upgrade your membership to 1 year so you can avail of the 50% discount, please message us at contact@equilis.com. Okay, so I'd like to see you in one of these seminars. Again, my name is JC De Guzman. Have a disciplined, profitable trading week ahead. Thank you and bye for now.